GB Cycles here with an update on January the 8th. So here I have a chart from 1 month back in December, and at that point I draw two general scenarios here, one sideways in green and a bearish one in red. And when looking back at this, actually the S&P has pretty much followed my bearish red scenario. I was looking for a down leg starting in December and some kind of a bounce New Year's rally and then a continued downturn. However, I became bearish over a year ago, and I started these videos around January, putting them out here on YouTube, and so I won't stay bearish forever. I'm not a perma bear, so at some point I have to turn bullish again. But I don't think we are there yet. However, as a bear, I don't like the bearish action we have seen the last 6 months. Starting this recent month, I think this goes a bit too slow, this down leg. But something may happen here. But it goes slow, and also past 6 months going sideways. I don't like it. It should have been more bearish. But still, that may happen soon. But yeah, let's have a look at the bigger picture. We have this band with a 21-month offset, and we haven't decisively broken below this, and we try to hang on here. But if we start to go down here the next weeks, we are kind of getting a confirmation of this bearish signal, and it will project a downside target around the S&P 3000. And looking at my scenarios, we are kind of within this channel still, but we should very soon turn down here into a low in the spring sometime, and we could have even a lower low later. If you look at the Nasdaq, that one looks more like what I had been expecting from the S&P. Here we have broken the offset, we have broken the 42-month average, making a bear flag below. Here we should see continuation down. But then we have other markets, indexes, Dow Jones, industrial, others that look much more bullish. So we end up with the S&P kind of in the middle. Nasdaq dragging down, industrials pulling up, and we kind of have in the S&P kind of a triangle formation here when looking at the 42-month average here and the 200-day moving average up here. They are converging into like a triangle here. So we could see either we should flush down below this average or break up above the 200-day moving average, and could have some wild moves, rally, capitulation. So I have my 7-year cycle, suggesting a low around February, March, or even in the summer, or August, September is also possible. But after that, I don't have edge for much more downside. But historically, we could even make later lows than that. But that would be unusual, but it can happen. And looking at this down leg from the average of historical down legs after a bear market rally, we are pushing it. We are at the top of this channel, actually above. So if we are to follow this scenario, we should go steeply down the coming week and weeks into a low in the end of January, and after a bounce probably a lower low in February, but we can't go much higher here. Looking at these cycles again, I have the dominant cycle here would be the 16-week cycle, so I have made a 16-week offset and a 32-week offset, and as we see, we are right at the 16-week offset, and breaking above here and gaining momentum here. That is not a bearish behavior. That's bullish, unless it's some kind of a bear trap. Because if we look at, I made a couple of videos of historical bear markets, and most of them show a very similar, or call it ideal, behavior, but then we have some not that ideal. We have in 2001, 2002, after the 9/11 crash, we have this strong rally, rejected at the 200-day moving average, but then we made a higher low, and then we rallied back up, breaking this falling trend line and breaking above the 200-day moving average and breaking above this offset, and many signals were pointing to a new bull market, but then we still got the capitulation. So this was a kind of a very irregular bear market bounce, and for bears playing this, it must have been very frustrating seeing this unusual behavior. So many were probably squeezed out here at this point, and then we had the capitulation. So I fear we are into some irregular behavior at this point, but still we are not there. Still, this is a classical bounce up to the 50-day moving average. It's a shoulder, and then we move on downwards. And my 4-week cycle, unfortunately, hasn't been working that well since October. So going back one cycle, or going back 4 weeks, we see at this point, 4 weeks back, we started to flush down. So that could suggest, if this 4-week cycle is working, we are at a similar point where we started to flush down. And looking into hourly data, this is the Dow Jones Industrial. We see here I have drawn the 2-week oscillation. Within the 4-week cycle, we have often a sub-cycle of 2 weeks. And in the last video, I was not sure if we were at the low or if we still had some more downside, but this was a sideways oscillation. We didn't get this downtrend I was looking for. It was more like a sideways oscillation. And we are now in the new 2-week oscillation. We are approaching the top. Looking at my wavelet down here, we are approaching a sell setup, but we could still have 1-2 more days to go. So we are within this, looks like a bear flag. So critical point here will be first couple of days. Do we see sabotage, stagnation, or a breakout, momentum? I wouldn't like to see that as a bear. I would like to see more, a gap down and bouncing back up, and then starting a downtrend, something like that. So let's see. I've been showing sometimes this analog from the 70s. This is these are aligned by my 7-year cycle, and this cycle from the 70s is the one that's most similar to our current situation. And recent months has not been that similar, but if we are to continue this analog, we are about to break down from here. Yeah, I guess that was it. So I'm looking for downleg continuing next week, unless we are in irregular bounce.